what we don't ask for, we really don't need. We're partners. We need you and you need us. To mitigate the risk, 3 elements that slow down the file. First is submitting your documentation into the correct bucket. Second is reading the documentation. And third, don't assume that this documentation is what we're asking for. If you know the asset statement is 45 days, why submit it? It has to be 60 days. You have to fulfill that. I look at every file and I say, is this file sellable? I'm not gonna rush a review. Everything that's given to you and every tool that you use, there's always a human being behind it. Take your time. Don't rush the submission.
Hi everyone, I'm Alexandra McClymont, excited to meet you and to be hosting the Digest by A&D Mortgage, your trusted source for insights into the mortgage industry. Today, we're exploring a topic that can make or break a broker's deals, underwriting. To help break it down, we're joined by Joey Oramas, a senior mortgage underwriter with experience across conventional, FHA, VA, jumbo, Fannie Mae, and co-op loans, and someone who's optimized pipelines, managed quality control, and trained teams to hit near perfect accuracy. We've seen your questions about speeding up approvals, avoiding compliance pitfalls, and working efficiently with underwriters. And today, we're answering all of it. Time to get started. Joey, thanks for joining us today.
Thank you for having me.
Super excited to talk to you. I really want to start from the beginning. So if you could tell us a little bit about your journey to start mortgage underwriting and how some of those early experiences shaped your workflow today.
Well, I started in the mortgage industry back in July of 1998 as a mortgage loan officer. Had a mortgage broker license and a mortgage broker business for about 10 years. I transitioned into underwriting because I felt like it was very interesting understanding how the risk is reviewed among different areas. And I utilized that in this platform throughout the years of understanding profiles. Every loan is totally different. I use all those experiences throughout the year to understand how to make it easier for our partners to understand what is truly needed versus what is not needed.
So throughout your career, you've worked with a wide range of products, conventional, Fannie Mae, co-ops as well. Can you talk to us about some of the strengths and what is most important to make a loan process smooth?
The key thing of making a loan process smooth is you have to understand the elements that are being used. And what I mean by elements, I mean AUS, right? Because it's driven by AUS, LP and DU and et cetera. Understanding what is being asked of you and the documentation that needs to be supplied. If you take the time to understand the guidelines, it would make the process a lot more faster. If you submit documentation that doesn't belong to the file, it actually hurts the process because what we don't ask for, we really don't need.
Speaking of DU and LP, I want to talk to you a little bit about automation. It's becoming a lot more common in today's market with loan underwriting. What are some of the things that make sure that we can keep things accurate while utilizing these and keeping a faster process when we underwrite?
Right, so the system itself is driven to mitigate risk, right? As an underwriter, we also put another layer, our own layer of risk because of the experience we have underwriting these loans. The way I look at things, and I'm quite sure a lot of underwriters will agree with me, is we have a wage earner. Wage earner could mean many things, right? But we follow the documentation. We go back into the DU itself and ask Polly what's used today, right? And hey, we have this scenario. It'll give you the guidelines. If it meets all the guidelines, as long as you have the documentation that meets the guidelines, I think it makes it a lot more easy to utilize the technology. Sometimes if you overuse the technology, you can find yourself creating risk in the loan.
You touched on risk mitigation. Of course, risk mitigation and speed are most important to both our brokers and our borrowers. So we would really love it to hear a little more from you about how our brokers can make sure that they're in compliance with mitigating risk, but also maintaining speed for our borrowers.
Well, the brokers, what they have to understand is we're partners, right? We need you and you need us. To mitigate the risk, you have to understand that when a condition is given to you, as an example, 30-day pay stub, and if you see that the pay stub is only 21 days, obviously address it, right? If you take an application and the borrower says, I work at this employer for 2 years, and as you're gathering the documentation and you see that it is not 2 years, well, address it before we get our hands on the file. Because what happens is, I review the documentation, I condition the file. I don't want to condition the file. I'd rather the file go straight to closing. But unfortunately, because we're given information that is inconsistent of what is said on the 1003, which we call application, it kind of creates havoc, and it creates questions, red flags. How do we address them? And if you could avoid mitigating the risk, the first thing to do is look at your documentation. Look at the borrower's profile. Does it meet when you took that first initial application with the applicant? Does it qualify based on the information that's given to you versus what was given to you over the phone? That's a perfect example, right? I could say I work here at JP Morgan, but my W-2s say now Wells Fargo. Something's missing. That's how you could avoid that.
So would you say things like perhaps missing documentation are some of the most common pitfalls that you see with brokers and lenders, or do you think there's something else that is a more common mistake that you see happening that slows down a file?
Yes. So what happens is there's 3 elements that slow down the file. First is submitting your documentation into the correct bucket. That's why we have conditions. Second is reading the documentation to make sure does it fulfill the requirement. And third, don't assume that this documentation is what we're asking for. If you know it's not the documentation that needed, perfect example, 60-day asset statement for purchase loans. If you know the asset statement is 45 days, why submit it? It has to be 60 days. You have to fulfill that. And I think that's the oversight. Oh, they will take it. I don't think I need the rest of the days. No, it has to be a sellable loan for us. And unfortunately, that's something that's, for the past 25 years, I see as a constant.
I want to loop somewhere, and it's funny, actually, I was thinking about a loan that I have right now. You guys want exactly 2 years history, which is very typical. And he's like, well, it's almost 2 years. It'll be 2 years in 2 weeks. But it's not 2 years right now. And the condition is what it is.
Correct.
And we need to fulfill it. And, sometimes there's no point in going in this circle.
Absolutely agree. So what happens is you could fulfill that, right? But the thing is if they're trying to close in 21 days, for example, October 1st, 2021, it wants to close, okay? And you get the application September 12th, let's just say. At the time of the application, this is something that's critical that people don't really understand. At the time of the application, are you and was you employed for the past 2 years? That is the question. And if not, then yeah, we could proceed if you're 1 year and 10 months, but you just can't close until the 2 months have passed.
Right.
So if we could explain that to the customers, that unfortunately you currently don't meet it, but you can meet it to do some sort of extensions to the contract, etc., then it'd ease the pain and the expectation from the customer. Because at the end of the day, the customer is the one that really needs to understand the process.
And that actually leads me to my next point. So I want to talk a little bit about some different borrowers. We have some first-time home buyers, a lot of niches there with borrowers. What sort of unique scenarios do you see, and how do those affect your underwriting process? For example, when you have a first-time home buyer, how does that affect it versus maybe you have someone who's an experienced investor? What do those differences in underwriting look like for you?
I don't see a difference in underwriting. I see a difference in the guidelines. First-time home buyer, perfect example. They have to fulfill what? The online course. They need to educate themselves about what is and what happens when you become a first-time home buyer. On an investor standpoint, it's a little bit different. It's more risk when you have an individual that holds multiple properties, because obviously it's called the revenue, right? They could hold 10 properties and 5 tenants walk out on them.
Right.
How do they continue to make the mortgage payments, right? When it comes to a first-time home buyer, they're excited. That's their first home. That is, they're gonna do everything possible to make sure that they won't be late or tend to lose their home. So there's a difference between understanding a first-time home buyer and understanding an investor. An investor's in the business to what? Invest, right? They earn their money. A whole first-time home buyer is, this is my first home. It's not considered to be a house or a property to them. They normally would say to themselves, deep down, this is my first home. And that means a lot. So I don't look at it as which one is worse than the other, no way. I look at it as, well, these guidelines meet for this perspective versus the other. And I kind of handle first-time home buyers a little bit more sensitive.
Yeah.
Because I know this is their first home, right? And I remember when I first bought my first home, and it's good to see someone move into a home.
Those always feel a little different, even when I'm looking at and reviewing the 1003, and I can see their income and I can see their history, and I'm talking to the loan officer who's like, telling me how excited they are, and they've been looking at this one property for months, and I get emotionally invested, of course, as an AE. Of course, there's still a business perspective, obviously. This is a loan that I want to close. But it's also a really good feeling to have that close and have it funded and know that we've really helped somebody achieve a dream.
Exactly.
So it's always a great feeling.
Yes.
I want to switch gears a little bit and talk about what it's like for you to lead a team. Can you talk to me a little bit about the difference you see with brokers and some team leaders who are able to keep their pipelines clean and moving forward and getting approvals through on time, and ones who maybe are not able to do that?
Well, in the aspect as far as managing a team, it all depends of the strength of the team, right? Team is very important because team is not one person. Team is a group of individuals. And as long as they help each other out and ask themselves questions and have the group chats and say, hey, I have this scenario, it kind of helps the process, and it mitigates the process, so to say. As far as managing, I don't see it difficult. I just see that there's going to be times where you're going to have an individual that's weak in certain areas. Perfect example, weak in reading assets or weak in grossing up income. We have a lot of tools that we use that will soften the way we look at things. I give you a perfect example because examples for me really explain my day-to-day job, or operation. When I come in, my concern is what loan is closing today and what's holding up that file. Second, how many loans have been given to me to do initial reviews? And third, my conditional reviews and emails and, returning phone calls. But at the end of the day, we have to utilize our time wisely. If the file becomes too difficult, ask the question to one of your peers, because you can't sit there navigating and trying to figure out, was this right, this was wrong? No, that's why we have what's called escalations, right? We reach out to our manager and say, hey, this is our scenario. What are your thoughts? And if you can manage your pipeline in that form, you could actually benefit. We could benefit with our partners, right? Because it's important. And vice versa. Our partners could also benefit if they look at it in that perspective as well. Remember, we're a team. We're working hand in hand together. So we should at least be in the same playing field of understanding what is expected.
Speaking of our partners, can you give them a few tips and tricks to make sure that their loans are moving forward fast, even when we have a high volume scenario? You know, a few weeks ago, we had a bunch of submissions, more than we've ever had.
I have it now.
Yes. So how can our partners make sure that their loans are still moving quickly in those sorts of environments?
Allow the underwriter to do the job. If you send one email, I understand you're trying to get to the finish line. But again, on our side, we're trying to mitigate that risk. I look at every file and I say, is this file sellable? I'm not going to rush a review and then prior to closing, there's an issue, right? Or the fees are off. They're off balance and the person's sitting at the table. So I think if our partners could utilize and just take two, 3 steps back and understand the scope of the work, I think it'll make things a lot more easier.
I want to talk a little bit about our company here, AD Mortgage. We have a lot of great tools now. We have AIM, of course on the non-QM side, we have non-QM AUS. How do all of these tools help our brokers and underwriters like yourself keep these files moving?
Well, obviously the system automated, it generates quicker approvals, right? Mm-hmm. And mitigates risk as well, right?
Exactly.
So it just makes it easier for the underwriter, for the brokers, partners, et cetera, to understand the file and the file flow. A lot of times you could get a condition approval with the system, right? And it says, well, you only have 2 internal conditions remaining, right? Mm-hmm. That's a happy file, right? You're like, happy. I am going to that finish line. But also you have to put into perspective that everything that's given to you and every tool that you use, there's always a human being behind it. And you have to allow for the individuals to do their work and vice versa, me too. Because sometimes I'll call a underwriter and say, hey, where's this? I just talked to you yesterday, 24 hours ago. You provided this, I need this. So it's communication, right?
My experience with all of the underwriters has really been amazing. Mm-hmm. I had a file a while ago where it was a father and daughter. They were wanting to have an investment property, and the daughter was like a med student and she got a stipend, and senior underwriter reached out to me and he was like, hey, we actually don't need her income at all. It's actually gonna hold it up if we try to get it. I guess it's tricky for you guys to get documentation for stipends, or maybe it takes a while to communicate with university. Mm-hmm. So he was like, we're actually just gonna exclude it altogether. And it really was a huge help actually in moving that forward. And it was a lot more streamlined process. And so all of my communication with you guys has been great. And you guys are always more than willing to help. And because we all have the same goal.
Yes.
Us, you, partners, we all want to get people approved when we can, in a good way, so we can securitize our loans, because that's important to us to make sure we can securitize them. So we all have the same goal, and I agree, it's really, really important to make sure we're all communicating and we all keep that in mind when we're working on the file.
Yes, and respect one another as well. That's very important.
Oh, I've had people get an email and be like, hey, direct this to your AE because I'm not talking to you anymore. It's so embarrassing for me. Oh my God, like, why are you doing that? I want to look into the broader market for a second. What are some things going on in 2026 that you think brokers should keep an eye on to make sure that their files are continuing to move forward?
I just think that if you're a broker, heavily be involved in all these free organizations, and some of the organizations you have to pay for, but it's not much of a fee. And participate. Understand the laws, the changes, and what's happening in the financial industry. Everybody says Fannie Mae, Freddie Mac. I think in the near future, Fannie and Freddie will be washed away. And you're gonna have a lender like AD here, where this is a one-stop shop.
Yeah.
Okay? And you're going to see less of the pitfalls about asking for documentation. And it's going to be a streamlined process. And it's going to make it easier for everyone. But if they don't participate in the laws and they don't voice their opinions, then obviously we have certain laws that hurt us instead of helping us. And we have to be active in the community. It's very important to be active in the community and get yourself involved. It feels good to walk into a group and speak up to that group and give them your side of the story and where you believe why certain laws don't work and they do work, or etc. But it's real good to be active in the community.
One last question for you, Joey. If you can give one tip to brokers in their communication with underwriting to make sure we have clean approvals, faster turnaround times, what would it be?
Take your time. Don't rush the submission. Make sure that your buckets and your documents are put in the appropriate buckets. And make sure that you're not buckling them all together in one shot, because what happens is it's very hard for us to go into the system and then start dividing these documents, putting them in the right bucket. It just takes a lot longer for us. But understand your documentation. I mean, the key thing is, if you know your borrower and you know your application, make sure that you're submitting what is appropriate to the application. Don't second guess yourself and say, maybe I need to give this additional information. No, you really don't. Avoid that. Avoid that as much as possible until the underwriter says to you, hey, this is what's needed. It streamlines the process a lot quicker.
It's been great talking to you. I really appreciate your perspective. I'm sure that our partners will really appreciate it. And for me, it's always amazing to get some more details from underwriting, because we all work together as well as a team. And understanding what that process is like for you is just as important to me, so I can help facilitate a little bit more with our partners. So I really appreciate it.
You're more than welcome, and I appreciate you sitting with me and picking my brain.
Thank you.
You're welcome.
That was an insightful conversation, the kind that helps brokers understand how underwriting really works behind the scenes. Now it's your turn. What's tougher in your business today? Keeping files moving fast, or making sure nothing falls through the cracks? Drop it in the comments. Don't forget to like, subscribe, and engage with this episode so the algorithm keeps serving you content that helps you win more business. Until next time, take care, stay informed, and let's continue growing together.